All right, I think I heard the magical record button. All right, I'm going to roll through this bad boy. If we got people to jump in here, we'll add them as we see fit, but I just want to walk through today. So, morning, everyone. Rusty reaching out. Collab Lending here today. We're going to talk about VA loans here. I'm going to walk through a couple things here, but I'm one of the sales directors here with Collab, so just wanted to educate you guys a little bit better about VA loans so we can help our veterans and men and women that serve our country here. It's pretty awesome that, this is probably my favorite program we get to utilize because we get to give back to the people that do so much for us. So, all right, here's today's agenda. We're going to talk about assuming a VA loan, steps to take. This is one of the questions I get a lot of times here, and just want to kind of walk through some of this, clear up the confusion on VA loans. That's the other piece. There's a bunch of questions I field on a regular basis about VA loans, and I'd like to just let's tackle them today. If you guys have anything else, we'll go ahead and jump into that as well. How is a VA loan different? What makes it different from conventional or the other programs that are out there? Who can be on a VA loan? Funding fee exemptions, residual income, and DTI, debt to income ratio, if you will. And then I have a couple other loan highlights and FAQs that, like I said, I get on the regular basis. So my goal is here is to help you guys whenever you do get these so that we can move forward and make sure we get them on the right path here. So first off, VA assumption. So assuming a VA loan. Linda, why would we want to go after a VA loan right now and try to assume it? What's the biggest factor that people are looking at if they're trying to assume a loan?
Interest rates.
Exactly. So we had 2s, we had 3s, we have 4s. Those are long gone for at least the time being. So you want to take over somebody else's interest rate and assume their loan. That's what you're trying to do here with an assumption. The first thing they have to do is qualify for the loan. So they need to make sure that they meet the requirements here. We'll kind of talk further about the requirements that are needed, but at least we want to look at this from the standpoint of, hey, do you actually qualify for the loan? They have to bridge any gap between purchase price and loan amount. I have a little illustration here down below. $200,000 purchase price. Let's say the loan balance is $150,000. They need a $50,000 down payment here in order to assume that loan. Work with the current loan servicer to take over and assume the loan. So if it is currently with a Veterans United or somebody like that, let's say, or New Res, and that's the loan servicer, that's the person or the company that you make your monthly payments to, or that the current veteran makes their payments to, you have to work with them to qualify for the loan. It's not working with an individual necessarily like me or somebody at the bank. You're going to work with the servicer directly. Not all servicers are created equal. They don't necessarily have to allow you to assume the loan. The VA loan is assumable, but they don't have to necessarily allow you to assume it, which is kind of silly, I think. Why would you not allow somebody else to assume it? It doesn't make sense to me. Every now and then I run into something like that where I have somebody and they say, we can't do this and here's why. Either way, let's assume that you are able to take over this loan. In that case, there's no appraisal needed. You just have to qualify and bridge the gap. So those are the things that we'll look at. I'm going to walk through a couple other things on the agenda on how to qualify to make sure that if you are looking to assume a loan, how you can do that. A lot of times, the biggest hurdle here is that $50,000. I think most veterans are told you can buy a house for little or no money. That's part of the give back that we do for our veterans here in order to go ahead and help them out at the end of the day. So I believe assuming a loan is in a certain situation, especially right now where we have loans out there that are much lower rates, and maybe it's a buyer moving up or down and they have the equity to do that. But if you have questions on these, I'm happy to help walk you through some more details on these processes. But at the same time, I know that I will not be directly involved in the loan. I'm happy to lend advice, make sure that we set them up to qualify for that assumption. Okay. This is my favorite thing. We are a veterans' family's gratitude for what they do. So making sure that we're helping them find the right property, structuring the best loan scenario for them, and guiding them through the process is the opportunity I think that we have as agents and as lenders. So whenever we get to do this, like I said, it's my favorite program to help these veterans out in order to buy a home for them and their families. I think it's fantastic whenever we get to do that. How is it different? I'm going to go into detail on some of these further in the deck here, but I just want to kind of walk through. So VA eligibility. How do you know if you're eligible for a VA loan? We'll kind of walk through that on some things that you need in order to be able to go ahead and qualify for the VA loan. Mortgage insurance. There is no mortgage insurance on a VA loan. That's the beauty of it. It can go up to 100% financing. That's fantastic. No money down. And then we'll talk a little bit more about seller concessions and how that even benefits you a little bit more here in a minute. Funding fees and exemptions. So who has to pay the funding fee and who is exempt from paying the funding fee? A lot of times, if you have a rating or if you receive disability benefits, you may be exempt from this funding fee. I'll talk about this a little bit more as well. Funding fees or fees that can and cannot be paid by the veteran. This changes back and forth. Whenever we look at it here, we've had some updates here. I want to talk about those. Normal DTI, if you will, and residual income, how VA differs a little bit here. Income, entitlement, and allotments. Whenever we look at this all kind of plays together into how the VA loan works. I'm going to pull back the curtain a little bit and not get too high level, but at least let you know here's how we look at it from our side. Calculating down payment. Based on what they have used in the past or based on what the conforming loan amount is, they may need to put something down. They may be able to go up to 100% depending on both their entitlement as well as their credit scores and what they qualify for here. Once again, it's qualifying the veteran here for the loan. Property and appraisals, how's the VA loans a little bit different on those? And then seller concessions and who can contribute. It's kind of unique for the VA loan on that really anybody can give a gift, which is kind of fun. So I'll walk through that a little bit further here. Let's talk about eligibility. Branches of service. In order to get VA eligibility, you either need a certificate of eligibility, which we order straight through the VA portal, and we're happy to do so on your behalf. That may require some extra paperwork on the veteran's side. It's called a DD-214. If they are still active, they may have a point statement from their officer that they report to, and that's another way to do it. But in the branches of service, make sure they have the right length of service for where they're at. So depending on whether they were active duty or whether they are reservist, this is different for each scenario. If you are a surviving spouse with benefits, they can also qualify for a VA loan. I have a borrower right now who is a surviving spouse, and she qualifies for 100% financing based on her husband's qualification and what he did for the country. So I think that's fantastic, especially able to help somebody out who's in a tough situation here. Full or partial entitlement. So at this point, this is where we do our calculation here based on what entitlement either they have left or what they are allowed. That certificate of eligibility I mentioned up front actually helps us to do that in order to determine exactly what they can borrow, how much they can borrow, and if they have to put any money down in their case. Who can be on the loan? I get this one all the time. Marital status matters. They have to be married if they are not a veteran. Proof of marriage, and then non-married borrowers. So realistically, on a VA loan, you cannot have a non-vet you are not married to on the loan. I had somebody actually reach out this weekend and said they were told if they put 25% down, they could have a non-vet co-signer. That's actually not true. The other piece of this, though, is that if you have another veteran who has eligibility, they can co-sign on the other veteran's loan. So let's say they have an uncle or somebody like that who has eligibility, and you have a younger borrower, they can actually co-sign. Two vets can be on the loan. Even if they aren't related, they could be on the loan. That's the other piece, too, that's really nice about this. So co-signers are not allowed necessarily unless they are veterans. I have had people who were going to get married down the road, go to the courthouse and make it so that they were married sooner to qualify, and they just left it under the rug here for a minute in order to make sure they could qualify and we could use both incomes. Not something that I love, but they were buying the house as they were getting married, so they looked at it like, hey, why not? Let's just go ahead and make sure that we can get the loan and make sure satisfy the VA conditions here. So that's something, yes, you can do as long as you can prove it. Most certainly. I've had borrowers actually have to do this in the past. Let's talk about funding fees and where they're at. So a funding fee, in order to utilize a VA loan, unless you are exempt, meaning you don't have to pay it, there are different amounts, and it varies based on down payment first time use, subsequent use, and where you're at. So funding fee is every time you access the VA funds on that 100% financing, there's always a cost. So that varies based on if you put funds down or if you don't put funds down, or if you're first time or subsequent use, depending on where it's at. This factor varies. 2.3 is normally what it is if it's your first time use, and that can go higher as we go down. Funding fees may vary by loan product or property type sometimes. So if it's a condo and it's a VA, it may be a little bit higher. That's one thing kind of just to look at there. How do we make your offer competitive? I love this. We'll pre-underwrite it. We'll make sure that we have it structured with a seller assist and go from there. VA loans, whenever they see 100% financing, normally it can be a little bit tough here because they're looking at this going, why am I going to take an offer with no money down, right? So sometimes we get a little bit creative here. I'll give you an underwrite. I'm happy to always make a phone call in order to help here and make sure that we have you guys with your VA loans ready to go. Sometimes, and we'll talk about a little bit about appraisals here, they can get a little bit picky on different things, but just knowing that VA loans, I think, are just as good as any other loan is something that we try and make sure that we have ready for you here. So on the funding fee side, on the exemption, so service-related disability qualifies you for exemptions. A lot of times they'll have what's called a rating. Right on the top of the certificate of eligibility, it'll say exempt or non-exempt. It'll let us know normally. The VA can also give you updated paperwork saying that you are now exempt from that funding fee, and it reports all on their portal. So it's pretty easy for us to pull normally. If you are pre-discharge disability, that's another way to be exempt, or if you had a Purple Heart earned on active duty. Of course, you are exempt as well as the surviving spouses here. So that just lowers the closing costs for the loan at the end of the day here by not having to worry about that funding fee, or lowers the loan amount because you can finance this in as well. So it actually will lower that monthly payment here at the end of the day and the amount of money that you borrow. Fees that you cannot be paid by the veteran. Appraisals, compliance inspections, those can all be paid on some of those. Lender fees can be limited. So lender fees are limited sometimes up to 1%. So it's not like, we make the most on these sometimes. It's we can look at these and say, yep, here's what we have to do for our veterans, and that's why I love to use this. Real estate transaction fees, unfortunately, those admin fees, you are not allowed to charge those. So the admin fees we collect in every deal, they look at as benefit to the veteran that you are not allowed to charge those here in this case. And that's, I think, part of the deal is working with the veteran. Hey, well, let's waive it. We'll take care of that on our end if we have to a lot of times. I know on our end, we try and take care of some extra fees whenever we can, if there's anything else that is out there in order to help the veteran here in our case. This is my favorite one, and this might be a little bit confusing, but we'll kind of walk through it here slowly. I just want to give you an overview of this, just how we look at these different. The VA program is the one thing that sets the veterans up for success. So debt to income ratios, traditionally, all of our debts plus our mortgage payment divided by our gross monthly income. That's the calculation, right? Residual income's different. After we meet the monthly mortgage payment and all of our liabilities here, plus childcare expenses, and then we even estimate utilities in there based on square footage at 14 cents per square foot. They set up a budget for the veteran so that at the end of the day, they have to qualify with this budget and make sure that we set them up so they have money to live. This is why this is one of my favorite products, is because it protects the veteran from themselves a little bit here, so that it allows for, whether it's 1, 2, 3, 4, 5, how big your family is in the home, it actually goes up and down here. And I'm going to show that chart here in a minute on how the residual income calculation is a little bit different. It works more off of net rather than gross. Qualifying debt to income ratios off of gross, net after your taxes are paid, after Uncle Sam takes his piece, everything like that, plus these other factors to make sure that you qualify. You can have a extremely high residual income, or excuse me, debt to income ratio. And if you qualify with residual income, 9 times out of 10, it will still work based on credit scores and overall profile. It says up top, they both must be met. Realistically, there's a little bit more wiggle room here because of the way the residual income is weighted in a VA loan. Here's this wonderful chart. I'm just going to give you, in this case, they had 4 people in their household here. So we are in what is considered the Northeast region here. And you see it's broken out by different states. And then they needed to have, at the end of the day, for the Northeast region, $1,025 left over after they paid all their liabilities, after they paid the mortgage payment, and after taxes and everything were taken out net, they still need to have $1,000 left. I believe this just sets that veteran up for success whenever they're utilizing these programs. Income, entitlement, and allotment. So whenever we do have people that are active and that are working here, what is taxable, what is non-taxable? Whenever I'm looking at pay stubs, this is an easy one, and I have a wonderful sheet that kind of breaks this out to allow me to know what I can gross up, what I have to tax, to make sure that we're showing proper income for these veterans that are active, that are receiving pay from the government and the DoD whenever they're doing this. So this is just a quick little breakdown of, hey, this is taxable, this is not, just to kind of show you guys that piece. All right, pest inspections. They changed it last year. You always need a wood destroying insect pest inspection whenever you're doing a VA loan. It's one of the requirements here. So whenever we're looking at pest inspections, the veteran can now pay their own. They used to not be able to pay it. It used to be the seller had to pay it. Somebody else had to pay it. We normally picked it up. That was a piece of it, $75. Hey, I'm good with paying that. I'm not worried about it. As far as calculating the down payment, I have a wonderful tool and a calculator that does that. Once I have the COE, even if they have a VA loan out, we can still calculate what they have for what is called bonus entitlement. Now, bonus entitlement is something that allows you to buy the next home, basically, and qualify that way without having to sell the first home. So properties and appraisals, whenever we look at the appraisal, it has to be done by a VA appraiser. So they are a certified VA appraiser. It's ordered right through the VA's own portal. The hardest thing that I look at sometimes with the VA loans is that once we order the appraisal, we don't hear until we get it back. That's one of the biggest things that I look at here for where we're at. They're not the best at communicating based on what the government is doing on the portal. Of course, we can reach out during and try and get a response here, but a lot of times the listing agents are our best communicator here when, hey, did they reach out? Did they schedule, to know where we're on pace to? I can find out when it is due, normally about 10 to 15 business days after it's ordered, but just to make sure that if we can communicate that, that's one of the biggest things here. They're going to pick on things like chipping and peeling paint. They're going to make sure there aren't any health or safety hazards. It needs to meet the VA standards on their guidelines here. So kind of prepare yourself for that. It's a little bit of conventional. It's a little bit of some of the FHA, USDA in there with the chipping and peeling paint that they're going to look at, but it's got to be move-in ready and safe for the veteran, safe for the homeowner at the end of the day. Concessions. I love this piece. So with seller concessions, you can have unlimited seller concessions on a VA loan. They can even pay off your debts in order to help you qualify. I mean, they meaning the seller. I did have one loan a few years ago where the seller agreed to pay off some credit cards so this gentleman could buy his home. It was basically a domino. He needed to sell his home. He was another veteran. Said he wanted this guy in here, and that's what they ended up coming up with. Hey, I'm going to pay off your credit card so you can qualify here. It's one of those caveats for the VA loan that just, I think, is a little bit different than everybody else here. And that's why I think VA loans are just a little bit special whenever we look at this, because you can do things like this in order to help people at the end of the day. Their appraisal, I'm going to jump back to that real quick. A lot of times if we have something that is going to come in less than what the purchase price is, we don't get notice. We just get the report and we say, hey, it came in under value, right? In this case, VA actually has, it's called the Tidewater Act. It's a little bit of a different process. They let us know and they give us 72 hours and say, hey, it's going to come in low. Do me a favor. Do you have any better comps to support this? What are your comps that you use as a listing agent, as a selling agent, or as a buying agent? And give us some comps. At this point, we're all on the same team. I say, do me a favor, send me 3 of your best comps from listing agent and buyer's agent, and let's make sure we have them to the appraiser to make sure they didn't miss anything that may qualify here or may help us to bring up this value. I had one that went quite a bit over here a couple months ago. It did get tidewatered. It ended up only coming in $3,000 light. It may have been larger than that, but I had both agents on board working for the buyer and the sellers to make sure that they got the highest dollar of what they wanted. $3,000 on a $400,000 home, basically. not a huge deal here. They were able to make it work. They just lower the price. At the end of the day, Tidewater kind of splits that difference here and helps us out, but they give us a heads up at least that, hey, we're going to have a little bit of a light appraisal here. So those are the big highlights here whenever we look at the VA program, and a little bit of a peek behind of what we go through on our end with the veteran whenever we're qualifying them. I got a couple quick questions for you here just to look at this. So can veterans pay for their own pest inspection now? Lisa, what do you got?
Can they pay for their own pest inspections? 1 second, please.
You're good. Look at Linda. That's all you got to do. They changed it last year. They most certainly can. The other one that I get quite a bit is well water. Are well water tests required for the VA? The answer is yes, in all of them. The nitrates, nitrites, they make sure that they have a clear drinking source here and a clean drinking source. And if it needs to be remedied or a system needs to be put in, hey, they may require that at the end of the day. But I know oftentimes we do run into well water with some of these more rural properties that are out there, and VA, the veterans just love it here. So any other questions I can answer for anybody? If not, thank you guys very much for your time this morning. Once again, my name is Rusty with CoLab Lending. If you want, you can scan that wonderful SQR code. That'll download my contacts and pre-approval link. They are on the screen as well. If you need anything else, please reach out. Have a wonderful week.
Thanks so much.
Thanks, Linda.
Bye-bye.